Hey everyone! Today we're diving into the dazzling world of gold, the shiny metal that's been turning heads for centuries. Why is gold so special? Where does it come from? And why are its prices bouncing like a roller coaster in 2025? Grab a seat because we're breaking it all down. Section 1. Where does gold come from? Gold is primarily sourced through mining and recycling. Mining accounts for the bulk of new supply, with major producers like Australia, China, and South Africa extracting gold from underground and open pit mines. In 2024, global mine production was approximately 117.7 million ounces, and analysts project a modest 1.5% increase to 119.5 million ounces in 2025. Recycling or secondary supply comes from scrap jewelry, industrial components, and other sources, contributing around 48.4 million ounces in 2025, up 10% from last year due to higher prices encouraging sales of scrap. Together, these sources form the total supply, estimated at 167.9 million ounces for 2025. Section 2. Demand Dynamics. On the demand side, jewelry accounts for roughly 37.8% of annual consumption, particularly in markets like India and China, where gold is both a cultural staple and a store of wealth. Investment demand, including physical gold bars, coins, and exchange-traded funds, ETFs, is another major driver, with investors purchasing an estimated 37.9 million ounces in 2024. Central banks are also significant players, buying over 33.6 million ounces annually for 3 consecutive years, led by countries like Poland, India, and Turkey, as they diversify reserves amid geopolitical tensions. Industrial demand, mainly for electronics due to gold's conductivity, represents about 6.6% of consumption. Section 3. Factors affecting gold prices. Now let's talk prices. Gold's been wild in 2025, hitting $3,400 an ounce, up 25% this year. Why the drama? It's like a recipe with 5 spicy ingredients, each one shaking the market in its own way. Let's break it down. First, global chaos. Gold is the ultimate safe haven asset. When tensions flare, like the US-China trade wars or conflicts in the Middle East, investors flock to gold to protect their wealth. It's like a financial bunker. More demand means higher prices. Second, interest rates. Gold doesn't pay interest, so when the Federal Reserve raises rates, people might choose bonds instead, pushing gold prices down. But when rates drop, like the 100 basis points cut expected this year, gold becomes a hotter pick, driving prices up because it's cheaper to hold. Third, the US dollar. Gold is priced in dollars worldwide. A strong dollar makes gold pricier for foreign buyers, cooling demand and prices. A weaker dollar? That's gold's green light. With the dollar expected to soften in 2025, prices are getting a lift. Fourth, central banks. Big players like China's central bank are buying gold by the ton, 108 tons in December 2024 alone. Why? To diversify from dollars and signal confidence. This massive demand acts like rocket fuel for prices. Fifth, tight supply. Mining gold is slow and costly. New mines take years to open, and output's only growing 1.5% in 2025. Recycling helps, but there's only so much scrap. When demand surges, supply can't keep up and prices soar. Section 4. Forecast for 2025 and beyond. As of April 2025, gold prices are trading at approximately $3,315 per ounce, up 25% year-to-date, having hit record highs above $3,450. This surge is fueled by relentless central bank buying, particularly from China, record ETF inflows in the US and Switzerland, and safe haven demand amid escalating US-China trade tensions and geopolitical unrest. Analysts are largely bullish on gold for 2025, though forecasts vary. Goldman Sachs predicts $3,700 per ounce by year-end, citing strong central bank demand ETF inflows, U.S. fiscal concerns, and tariff uncertainty. JP Morgan forecasts $2,950 per ounce by Q4 2025, driven by tariff-related trade tensions, geopolitical risks, and potential Chinese consumer demand. Light finance projects prices reaching $3,320 by December 2025, fueled by technical momentum, geopolitical pressures, and inflation. Investing Haven is also optimistic, targeting $3,275 in 2025, driven by inflation expectations, bullish chart patterns, and a weakening U.S. dollar. Over the longer term, prices could reach as high as $5,000 per ounce by 2030 if geopolitical instability and inflation persist. However, forecasting beyond 2030 becomes increasingly challenging due to unpredictable factors such as technological advances in mining and shifts in central bank policies. However, one thing is clear: gold remains a shiny bet in uncertain times. Will it continue to glitter? Only time will tell.